Welcome to this episode of Mo Money. Taxes, taxes everywhere, and how our wallets did shrink. Even our savings are taxed, and in time it won't even amount to a drink. Savings levels for Americans are at record low levels. In fact, they're so low that they've gone negative. There are several important factors here to consider. First of all, what is the real incentive for people to save when the value of the dollars they saved appreciates so rapidly they might as well have bought a stock option? Of course, there is the interest that can be collected. However, interest rates are still so low versus the true rate of inflation, as I explained in past episodes of Mo Money, that your savings will still lose value over time. And wait, don't forget that we're still also taxed on that interest. Top off the fact that with high inflation, it is harder to save because people are forced to pay higher consumer prices for the same products just to maintain their current standard of living. And for those who have the guts and the skills to warrant pushing for a raise, you'll still be lucky if your salary just keeps up. Forget about getting you ahead. So, let's see how many ways the same dollars are taxed. Let's start with income taxes. That's on new money you earn and also includes taxes on any dividends, interest, and investment gains you make as well. Now, the rest we should keep, right? For starters, don't forget that investment gains on public companies are actually taxed twice, at the company level and again on your dividends and capital gains. If you take a capital loss, you're limited to deducting only $3,000 per year of those losses versus any other actual income. So one more punch for you. Okay, add state taxes, property taxes, and sales taxes. If those taxes don't get you, add in the cost of inflation to whatever you save. You may get a little back from your Social Security, if you're lucky, but between the adjustments for underquoted inflation rates and the fact that those checks are still taxed as income, I'd be surprised if it would pay for a night in a hospital if you needed it. And hey, if they still don't get you, don't worry. If you still manage to save anything substantial through assets and other investments, they'll get you with estate taxes. If you really think about it, you realize you're little more than a slave to a system that will make it nearly impossible to ever consider any real retirement. Inflation's been used for thousands of years to bleed wealth from the masses, so this is nothing new. In America, the Federal Reserve was established under the premise that such an entity was needed to protect us from monetary panics. Its true purpose was to control the money supply, create inflation, and issue debt. And although the Fed has been unable to avoid any major financial panic, its policies are directly responsible for every panic and monetary problem that we face today. Which leads to the Fed's even greater talent: managing and containing public inflation fears through clever tricks and by instilling a false confidence. It is interesting to note that in general, consumer prices did not rise at all for the entire 19th century and in fact remained relatively stable from 1800 to 1970, the year the dollar was taken off the gold standard altogether. Add 35 years to the present and we find that consumer prices have now soared over 600%. This price inflation is also factored into the GDP figures and gives us the false sense of security that our economy is actually growing. If we want to get commodity prices under control and offer more Americans a real chance at long-term prosperity, perhaps we should end the Fed's reign and consider returning to a solid currency backed by solid obligations. What better legacy to leave our children than a dollar saved today will be worth as much as a dollar earned when we retire?
Wow.